This week, we're going to look back at recent HECM data, reverse mortgage market developments, and also what may lie ahead for the reverse mortgage industry in the coming 6 to 12 months. We'll have all the details right after this short message from our sponsor.
Liberty Reverse wants to help you grow your reverse mortgage business with our proprietary Equity IQ product suite. Equity IQ gives your borrowers access to more funds, lowers their upfront costs, and expands eligibility for home purchases. Learn more at partners.libertyreversemortgage.com today. This ad is intended for mortgage professionals only and is not a consumer solicitation. PHH Mortgage, doing business as Liberty Reverse Mortgage, is an equal housing lender. NMLS number 2726.
Welcome back and thank you for joining us. Let's begin with the numbers. In August, HECM endorsement volume fell about 13% from the month of July, and that's the lowest month total that we've seen since February. But there is also good news, and it doesn't mean that demand is gone. If long-term rates stabilize or even drift a little bit lower in 2026, then we should see endorsement levels begin to level out or have a soft landing and gradually climb again. Now let's talk about distribution channels. SmartFi Home Loans made headlines recently by shutting down their retail arm and then focusing exclusively on wholesale, and that was put into effect immediately. And that's a big move, but it also signals something important. In today's environment, wholesale channels may simply be more cost-effective for select lenders. So don't be surprised if you see other mid-sized companies or lenders follow suit, reallocating their resources to where the acquisition costs are a little bit lower and margins are higher. But before we continue, I want to thank you for liking and sharing these videos for the Industry Leader Update. It really does help our channel. And also consider subscribing, that way you never miss any of our latest episodes. And speaking of subscribing, you can subscribe to HECMworld.com. That's where you'll find all the latest reverse mortgage commentary and analysis. So back to it. In addition to the distribution channel changes, we have a technology arms race heating up. Companies like Finance of America and Longbridge Financial are beefing up their AI and data teams. Yes, they're looking for new talent in those fields. And they're not just experimenting, they're actually actively building automation for intake, underwriting, and even loan servicing. So what could that mean for you? It could be faster processing times, lighter turn times, and also a borrower experience that feels just a little less clunky and perhaps more modern. The servicing side of the house is also experimenting with foreclosure avoidance tools. We covered that in a recent podcast. So we anticipate improved borrower outreach, streamlined tax and insurance reminders, and also more efficient document handling and the probate process being improved. Now, if adopted broadly, those innovations could lower claims cost and also reduce the number of unnecessary foreclosures that are due to technical default or even foreclosure after the death of the last borrower. So what does the big picture look like? In the base case, our most likely scenario will be that interest rates will remain sideways or even slightly lower. Wholesale lending will continue to gain market share, and AI tools will be rolling out to the consumer front end. And servicing, I think it's going to become more structured under HUD's new guardrails. So the upside for our industry is if we see inflation cool further and long-term rates drop, the HMBS appetite will remain strong, and that will push endorsement growth into the mid-single digits again by mid-2026. The downside is if rates spike again or inflation, HMB issuance could shrink and servicing stress would increase as seniors are struggling with property taxes and insurance costs. So what can you do as a reverse mortgage professional in light of all these developments? First is to be proactive about servicing issues. When you sit down with the borrower, early in the process, set the expectations about taxes and insurance. Those payments have to be made, and let them know what tools are available to help if they need it. Second, market speed and clarity. Borrowers will soon hear that some lenders can process their HECM loan faster thanks to AI. So don't be left behind. Talk to your lender and mark out the milestones in your efficiencies and turn times. And finally, look for older homeowners who are now feeling that squeeze of higher insurance rates and property taxes or even HOA fees or living expenses, because that's where demand is likely to remain the strongest. So to summarize, our market is in a state of transition. Volumes are a little choppy or uneven and channels are shifting. And technology is rewriting how we serve our senior homeowner. And HUD is also tightening the rules to protect the insurance fund. So stay tuned. Here at HECM World, we're going to be tracking all those trends closely in the coming months. But what are your thoughts on the state of our HECM industry and reverse mortgage lending in general? Share your insights in the comments section below. And speaking of sharing, if you would share this video on your LinkedIn profile. We mentioned earlier our YouTube channel, be sure to subscribe. And if you're looking just to digest some of the most recent reverse mortgage news, you can do that in our weekly podcast, HECM World Weekly. Listeners can listen and subscribe on Apple Music and Spotify. Thank you so much for joining us, and be sure to return next week for more reverse mortgage news, commentary, and analysis you'll only find right here at HECM World. Have a great week.